morning, everyone, and welcome to the 106th episode of the Veritas fact-finding series. And today, my special guest, Nasma Ali. Good morning, Nasma.
Morning. Thank you for having me. 106 episodes. That's huge.
In each episode of the fact-finding series, we go on the ground to speak to industry professionals in an unscripted, candid video live format to discover how we can make better investment decisions. In this series and with everything we do, we believe the facts empower investors and that better information leads to better investment decisions. If you're watching and you like what you hear, give us a like and follow us at veritascorp.com. By way of background, my name is Anthony Scilipoti. I'm the president and CEO of Veritas, an independent equity research firm founded 23 years ago, and I'm proud to say 100% employee owned. I have a quick note here. This broadcast is not to be taken as investment advice, and participants or employees of the Veritas group of companies may own securities discussed in this broadcast. And while we love all our guests, and Nasma, of course, specifically, this session may contain forward-looking statements, investment opinions, and comments that we may or may not agree with at all. Now, some quick comments on Nasma. Nasma's background, she studied engineering and worked for a decade in the corporate world. And then she figured out that, you know what, it's better to be in real estate. And she founded One Group, which is one of the top real estate teams here in the GTA. They've traded nearly 400 million in real estate volume in 6 years. And they work on roughly 200 deals per year. And Nasma's very active with her views, both in the media and on social media. And it's really a pleasure to have you on today, Nasma.
Thank you, Anthony. Really appreciate it.
All right, Nasma, why don't we get started? Always like to ask our clients to tell us about themselves and why it is that you do what you do and what's propelled you to become an agent, to run your own brokerage and be so vocal.
Well, I wasn't planning on being vocal, to be honest. But yeah, I mean, what propelled me to be an agent? I was kind of naive. I was just like, I just want to help people. And but then I realized that I was, the fact that I'm very analytical because, I studied engineering. I was really good in sciences, and it kind of helped me. A lot of people get into, real estate. They have like a decorating background or sales background. And I felt like I didn't have any background but to be honest, having an engineering background is very helpful because most agents all you need is a high school degree to be a realtor. And so already I felt that I was kind of, on a higher level in a way, or I had like a kind of a leg up over a lot of agents. And yeah, what made me become very vocal, and also why I left engineering, it's not well paid at all. It's not, you're just a worker bee. When you study engineering and you get into the corporate world, all you are is you're pigeonholed into kind of a technical field, and all you're doing is just, I was in computer engineering, and so all I was doing was software. And yeah, so I just felt like I needed something to feel like more fulfilled and, to my potential, because all I was doing was looking at a computer. Yeah. And why was I vocal? I wasn't trying to be vocal. I wasn't trying to be in the media or in the news. I just started, I went on, my friend pushed me to get on Twitter, and I got on Twitter, and I just was honest because I don't like, sorry, I don't know if I can say this, but I don't like.
Go ahead. You can say anything you want.
I don't like people bullshitting me. And so I just didn't want to, I'm not that person. I just tell it like it is. And so I felt like, you know what, let me just say really what's going on in the market because we're in it. And that's it. And I just started tweeting like honestly as a realtor, which I think is like very rare for a realtor to be brutally honest and not try to sell you every step of the way. Yeah, that's it.
And that's why you're here. That's why we call this the fact-finding series. We only want people that are not going to tell us any bullshit. So let's dig right into what's going on right now, because there's lots of question marks that people have. Let's go back a year ago. We were at the peak in February of 2022. Yeah. Interest rates are now up 450 basis points from where they started. And perhaps surprisingly, the Greater Toronto Area home prices in February were down 18% from the peak. And what's, I think, more important is that sales in February were down 47% year over year. That's a number of transactions. and
Yeah.
new listings are down 41%.
Yeah.
What's going on the ground?
Yeah. I think we have to, a lot of people hear sales are down. They think that, oh, people are not transacting, nobody's buying. That's not what it is. You have to listen to your other stat, which is listings are down. So right now, if you asked me a few months ago, if you asked me October, November of last year, I would have told you the market's dead, completely dead. Okay, like if you list something, you have no idea if it will even sell. Forget about selling low. You don't even know if it will sell. You don't even know if anyone will buy it from you, right? Now things are very different from last year. And it's amazing how, just a few months difference will make. So now, since January, usually, there's always an uptick in January from October, November, December, of course. But to be honest, we had no idea what to expect this year because you can't predict this market. You have no idea what's going to happen. And so with these interest rates, of course, there's a lot of hesitation out there, but we started seeing an uptick. And I know you have me here just to tell you what's on the ground. I'm just trying to report what we're seeing.
Yep.
And the thing about us is because we do a lot of volume, we tend to we experience the upticks, the downticks, if that's a word,
Sure.
but you see all the little fluctuations versus if you're working with, if you're talking to someone who really is working with 2 buyers at a time in a very specific area, they'll have no idea what's really happening kind of like all over the city.
Yep.
Anyway, so there has been an uptick in demand, but the problem is there has not been an uptick in listings. And there's obviously a few reasons for this.
Right.
What I've seen is that, as the rates have gone up, as we know, investors, they tend to choose variable rates, right?
Okay.
They tend to choose variable because that gives them the flexibility to liquidate at any time, right? There's no penalties, none of that. I know a lot of people think that, oh, you're greedy because you went variable. You know what I mean? Because variable is usually a lower rate than fixed, right?
Has been in the past.
Yes, it's not a matter of being greedy. It's a matter, again, as an investor, you want that flexibility to be able to sell at any time, right? Versus when you're on fixed, you can have a 25,000 penalty if you break it in the middle. So that's one. The other reason a lot of people also took variable end users is because, as you know, when the market was, high, multiple offers, what was going on with a lot of end users is that, let's say they're approved at a certain number, let's say 1 million. If they go variable, because variable is lower interest rate, if they go variable, they're now approved for a little bit higher than that. And so in order for you to have a competitive edge over other bidders, you just go variable because now you can up your pre-approval or your budget or whatever.
Price.
Yes, purchase price. Obviously it's not ideal. Every buyer wants to get something at the lowest price possible, but it's just one of those things where they found themselves to be competing and for them to get a good house. So anyway, the point is there's many reasons why people choose variable.
Yep.
Now what we've seen is that I have a variable mortgage, right? So what we've seen is that with the beating that we've all had with variable mortgages, right? Some people, their monthly has gone up $2,000 a month.
Yep.
Most people have held on. It's like a storm. You're in a boat. You're not like, you're trying to hold on to dear life until it subsides. And that's what most investors have done. We have not seen an exodus and a mass selling of properties that a lot of people expected, right? A lot of people expected that, a lot of investors are going to be liquidating, they're going to be selling, they can't afford it. But that's not really what we saw. What we saw is that by any means possible, investors were trying to hold on because their impression or their expectation is that, they can only increase so far. Eventually, it's going to stop. And a lot of people kind of predicted that it would stop this year. And then eventually it'll hold. And then maybe in a few months, maybe in a year. I'm just saying what people are saying. I'm not saying this is what is going to happen. Yeah. But eventually, maybe by next year, it's going to go down a little bit. Nobody thinks it's going to go back down to 1.5%. No, but hopefully no one thinks that. But listen, even if it goes down to 3%, what we had before, right? 3.5, that's great. Even 4%, give me 4% all day long, right? So So anyway,
right, let's unpack that a little bit. And just so everyone's aware, Francis, thanks for your comment. Variable rate and fixed rate mortgages are also portable most often. So if you have a property that has a good rate, you can transact and take that rate with you to another property. Where it's pardon me?
Keep in mind, a lot of investors, if they sell, sometimes they don't want to buy another property. They just want to take it and do something else with it. Yeah.
Well, this is what's interesting, and we've done a lot of studies on this, is about, and if anyone has any questions as we're going along here, just hover over the Q&A and I'll definitely make sure that we address it. So why is it, obviously, investors, owners of real estate have seen significant pressure because there's been significant exposure to variable rate mortgages, record levels, 35% of the total base. And so as a result of that increasing payments, we haven't seen anybody panic. We haven't seen anybody rush to list their houses because the number of listings are down 41%. And that's the point. So it's active, there's fewer transactions, but the market's still relatively stable because there's very little supply.
There's fewer transactions because there's not many listings.
Right. But why is nobody listing? Right. So why is nobody listing?
Why is nobody listing? Because they feel this. Okay. Why are investors not listing right now?
Yeah.
Because they know it's like selling when stocks are low. They know it's a terrible time to sell. And in their mind, and keep in mind also, and investors in real estate, it's like a religion. They are believers in Toronto real estate, and they believe that it will bounce back, right? They think that I'm going to hold on in 1 or 2 years or maybe whatever it is. When the market gets better, I'll sell. If my tenant leaves or if I need the money, whatever it is, I'll sell at that point. But we've had a lot of calls from investors who would call and say, I know the market's not that good. What's my property worth right now? When I tell them what it's worth, they don't want to sell. Because in their mind, they could have gotten last February. I mean, it's hard for people to fathom, right? It's
right. But part of that could they be in denial? Because listen, price used to be $1 million. Today it's 800,000, just roughly, because it's down 18%. So is it going to go back to $1 million, or is it going to go to 700,000? So and we see this often. We're all here in the investment world, so we see this often, right? People, when they always remember where the price was, and then as it falls, they're like, oh no, I'm not going to sell here. So that there could be a view that they're just in denial, because what's going to take it back to the $1 million?
Or how long? How long are you going to wait? Is it 10 years?
Exactly.
Because look at 89. In 89, it took, I think, all the way into
years.
Yeah, or 13 years, I think, for the prices to actually get back. But keep in mind, this is the part that I feel is, I don't like the word greedy at all. Like everybody needs more money. Everybody wants more money. It's not a matter of greed. Everybody wants to better their life and better their family's life, right? So it's not that. But, what we have to keep in mind is that prices now are still higher than they were pre-pandemic, like pre-2020. 2020 just everything exploded. If 2020 didn't exist, the prices of today we would feel are great. But because it went up like that, and now it's here, but like before it was still here, like we're still above what it was before 2020, but we just can't get 2020, 2021, 2022, specifically 2022 February, out of our kind of psyche and just delete it. What I usually tell investors is, if you want to hold on to it for infinite number of years, because we don't know when it's going to get better, then by all means, right? But if you feel like in 2-3 years you might need this money, what you know now is better than what you don't know in the future. What it's worth.
One in the hand's better than two in the bush. Somebody more famous than me named Warren Buffett came up with that. I'm going to make you think about something here. So they're holding on. Now, if I'm an investor, obviously you work with rentals too, so you're going to see the rental rates have gone up dramatically. So all across the country, we've seen rents, increase up to 30, 40, 50% in some markets. And so to your investor clients, the investors are like, oh yeah, my costs went up, but guess what? My rental rates went up. So everything's good. I'm still cash flow break even, or I'm not that bad. So I'm still okay. What happens if rental rates fall, and what drives rental rates to decline?
I mean, okay, to be honest, yes, the rental market was very active last year.
Yep.
Specifically summer of last year, right? And that's
Okay.
usually what happens because a lot of people's lease is up in July or August. A lot of students come in, a lot of employees coming in for a fall. So rent shot up last summer. But since October of last year, I think a lot of people don't realize this, is that rentals have really slowed down. Really slowed down. Like we used to list something in the past, like from summer of last year, from COVID, like 2020 until even 2019, to be honest, until summer of last year, we used to list something, a rental. Within one day, we get 3 offers. Okay, you get it's like a dream for a landlord because they get to choose between like 10 profiles and they choose they get over asking. It's not that anymore at all. I don't care if it's a house or a condo. Maybe if it's under $2,000 a month, but anything over that.
Talk to me about why that's happening. Why is it that the rents, now you haven't seen rental prices decline, you've just seen less demand. Is that true, or has actually the rental price come down?
Even rental prices, I need to get the stat to be honest, but even just from what we're seeing when we're giving comparables to our clients,
Tenants,
so to our landlords, our sellers, it's we're usually very conservative, and we always tell them like, listen, that high price we probably will not get, and we usually don't really get it just because activity is low. I just think that, again, times are tough. A lot of people are choosing not to move. Choosing not to upgrade. They're choosing not to pay more money.
And look what that's going to cause for all the listeners paying attention here. So there's fewer transactions. How does governments make money from properties? They make money from transaction fees. So all the revenues in all the cities are getting smashed. Provinces getting smashed. And we're in a point where, costs are rising because of employee costs, etc. This is going to have ripple effects. We had an expert on here, Andrew Grunda, who's a urban planner, works with a large urban planning firm. He's a managing partner, and he commented, all this new Build Back Better and all that stuff that Ford is pushing to build these new houses and so on. At the end of the day, what's going to happen is property taxes are going higher, and at exactly the wrong time. Everything happens at the wrong time. So, okay, this point you make about the rental rates is very important. We're going to include that to those listening here. We'll include that in our write-up, what's happened to rental rates. And keep the questions coming. I'm going to get to them, but just keep with the script here. But I think the next key point is what's happening differently, single family homes versus condos.
Okay. Single family homes, I'm speaking in terms of the city, but there are some suburbs, like for example, Pickering, Ajax, right? They are selling in multiple offers. And I know that, when you hear it from other realtors, you don't really want to believe it. And you're like, yeah, sure, that's BS. I don't believe that. It is true. It is happening. And to be honest, even as a realtor, that's not something we necessarily want, because we're working with buyers too, and that's challenging for buyers. So, okay, so just to clarify, some properties are selling in multiple offers. They're not selling at what they were selling at peak 2022, right? They're not selling at peak. They're selling at what you would expect, market value today. Maybe a little bit more if somebody really, I'm just seeing that a lot of buyers now are just pretty conservative. Gone are the days where someone is just like, I absolutely want this house and I'm going to overbid by 200,000 over the next guy. Like those days are gone for now. So it's selling, but not like at a ridiculous price that you wouldn't expect.
And so that's houses. And you're saying we've heard stories that in Milton, pardon me?
It's because of the shortage. There's not many. And I know like some people are like, oh, what are you talking about? Look at how Sigma, there's so many listings. Okay. If you look closely, like if you're working with, let's say a family, they have a very specific, 3 to 4 bedrooms, livable condition. If you look at a lot of these listings that are sitting, sometimes they're on a busy street, sometimes they're tenanted, sometimes they just look terrible inside. Like there are so many reasons why houses are not moving. You can't just look at the number of listings. That doesn't mean they're all quality, right? So,
but the number of listings are down to over 40%. So even if you look at the absolute numbers, they're down significantly.
Yeah. And also, I mean, right now buyers are very picky. They want like the good house. If they're going to buy in this kind of environment and this market, it better be the perfect house, right? That's how they feel. So, and then condos, in terms of condos, we have a listing right now downtown showing like activity is very healthy compared to what it was like last year. We're seeing pretty good activity. Some like few condos are selling in multiple offers, but mostly they're just kind of like, you list them at a certain price, you get a healthy amount of showings, and it will sell eventually, right? Maybe in a few weeks, maybe in a month. It really depends on the quality of the condo. Like if there's a okay, this is the thing. In challenging markets, like we're still in a challenging market, right? In a market like this or worse, if you have any deal breaker, like a really bad view, like you're facing a brick wall, okay, or like power lines, or you're on busy, or it's an old building, or whatever it is, it's going to take way longer than the average condo to sell, right? Or average house. But if you're in a hot market, even those sell like this, right? That's the difference. So anyway, so right now, most condos, I mean, there's the quality ones are selling. They're selling great in a week, in 2 weeks. On our listing, we've had agents call me, which I haven't had in a while. They would call me on day 1 or 2 of listing, and they would say, "Is it too late? Is it sold already? Do you have other offers?"
So it's interesting. Let's dig a bit deeper here on the condos, because we're going to have record number of completions this year, and what I understand from my network on the mortgage side is that deals are having a hard time closing because buyers that bought 3, 4, 5 years ago, rates are much higher. They're having to qualify at a different rate. They can't make it work. The bank won't give them the money.
Yeah.
So, and from our real estate conference, we know that assignments, now there's no listings formally for assignments, but that there's a whole market, let's call it an assignment market, that I understand is booming, or not booming, but there's many opportunities to buy.
Yeah.
So let's talk to what's happening and what this means.
I mean, it's the opposite of booming. Okay, pre-construction now is in shambles. Okay, it's terrible right now. It doesn't matter if you bought last year, if you bought even 4 years ago, for many reasons. One reason is that, I don't know if you guys know occupancy fee, like what that is.
Yes, we know what that is. That's the fee that you pay when you buy a condo, before you take full title to it, you pay an occupancy fee to the builder to cover the costs of carrying it until it actually gets closed as a formal condo corporation with the government. Yeah,
because the builder, he's building floor to floor. He doesn't want to lose money. He wants to get some of your money in the meantime, as he's building all the way to the top, right? So he's going to find a way to make money, and that's their way to make money. Right. And so they take like it's comprised of condo fee, it's comprised of an estimate of property taxes, and it's comprised of the interest on the unpaid balance of the purchase price, right? Yep. And so that's where the buyers are getting a huge hit. It's on the interest portion. So you have to understand, a lot of these people are buying these condos, like let's say 3 years. And a lot of these buyers never thought ever that we would get to a market like this. We would get to high interest rates like this. And so they purchased with a certain budget in mind of what the carrying cost is going to be, what the occupancy fee is going to be. Yep. And now they're looking at pretty much double that fee. So let's say they were thinking 2,000, now it's 4,000 a month on a 1 and 10, right? The issue is that the rent is not like, listen, historically in Toronto for investors, they're not buying for cash flow. I'm not saying that's the right thing. I'm just saying historically, they don't buy for cash flow. They buy for the appreciation.
Yep.
Right? I mean, you can't have both. If you want cash flow, you're not going to get appreciation, or not that much, right? So anyway, so they would buy for appreciation. So a lot of times, you know, when they're buying these properties, they're just thinking, you know, it's fine, let me tough it out, let me go through all these fees and these whatever, and you know, even if it doesn't cash flow, even if the rent doesn't cover my whatever it is, like my fees. So historically, when investors buy in Toronto, they are not cash flowing. Like they're paying out of pocket. Usually we're assuming 20% down payment. Okay. Now it's worse. Now it's like, you know, if you're looking at 300 out of pocket, now it's like 1,000 out of pocket, 1,500. Yeah. I'll give you an example. Like I'm talking, first of all, let's just say pre-construction. I have a client who they didn't buy with me. They just bought it on their own. And their occupancy was 4,300. The rent is not even 3,000. It's maybe 2,900, 2,800. The issue also is that you're competing with the whole building. Yeah. Can I?
Go ahead.
I know it's live, but can I pause the video for 1 second?
Why?
I'm so sorry. 1 second.
Okay. Wow. Sorry, everybody. She'll get right back to us. I'm not sure what happened. You know, that point she made about the properties that are not being able to sell. You'll remember that we learned that this whole the entire assignment market's really big. Anyway, so carry on what you were saying, Nasma.
Yeah. No. So I was just saying that, you know, now they're getting hit with these big occupancy fees, and the rent is not even and this is another challenge also for anybody buying pre-construction. You need to assume, because listen, pre-construction has been very attractive to investors in the past few years, more than end users. What does that mean? That means maybe 80% of the building are investors. And what does that mean? That means that when your unit comes up for, you know, available for lease, you're competing with almost the whole building.
The entire building.
Yeah, like I have another client who also purchased. They didn't purchase with me. Sorry to interrupt. I'm just going to say this one story.
No, please.
They didn't purchase with me, but they, you know, we got to know each other, and now their unit came up for occupancy in February. Since February, nothing, no bites. And the builder insists that they rent it out. So my client has no idea what's happening. You know, it has no information.
But every month is out $4,000.
Paying $4,000, yes.
So how can this not lead to a complete collapse in the condo market? Because this was always our concern. Way too much supply. Most of the buyers are investors, and the investors need renters. If the renters can't afford the rent, or there just isn't enough of them, the unit stays empty. If the unit stays empty, it sells to whatever the price will clear at.
We keep reducing the price. Yeah.
And so, but we're not seeing any significant hit to prices in the condo market, are we yet?
Not yet. See, that's the thing. They're still getting absorbed eventually. And like I said, a lot of investors.
But not these pre-construction ones, or the pre-constructions ones as well.
Pre-construction, it just takes months. It takes months, right? 3 months, 4 months, but eventually it gets absorbed. You know, the demand is there. I know it's hard to believe, but
no, I believe it.
Demand is there. But that's also why, as an investor, you don't want to. I'm always surprised when people come to me and say that they purchased an investment, which is, you know, let's say a 1 and done premium, $1.2 million. That's not an investment. You want the cheapest thing possible. You don't want to spend $1.2 million on an investment that you can't, you know, those are the last ones to get rented, right? The ones where, listen, does a tenant want to spend $2,500, or do they want to spend $3,500 on rent?
Yeah.
Right. So like,
depending on what they can afford and where they want to live and in what kind of a unit they want to live. So
most people want the cheapest possible. Yeah.
Okay. So let's try to bring some closure to this, because there's obviously a lot of moving parts and some interesting trends that you're seeing. So very few listings on the single family homes. They're moving, not at the prices of before, but the high quality units, buildings or houses are moving. Condos, There's a lot of pre-construction coming on the market. They're clearing, but it's taking a while. Rental rates starting to really slow down.
Yes.
What makes this, because right now it sounds to me like where we're going to see the cracks is in the condos. We'll see it if it's going to happen, we're going to see it there first.
Yeah.
And so if that's the case, but right now it's kind of holding on, what makes it break?
If we continue like this, and because this is what I think in summer things will change a little bit. The rental market always, there's always more demand in summertime than the rest of the year. So I don't know if it's gonna, but at the same time, there's a lot of units coming out. And a lot of people say, immigration helps because there's so much immigration, so many people coming to work here. Yeah.
But let me ask you that. So all this immigration, million people coming to Canada, many of them coming to our VGA and GTA and MTA in Montreal, but are they able to afford $3,000, $3,500, $2,500 for a condo?
See, that's the thing. A lot of, I don't know why people think that immigrants means people with money. Maybe a small portion of them, but a bigger portion are people with no money. People with, relatively speaking, very little money. They're big families. Big families don't want to be living in a 1-bedroom condo downtown, right? Or it might be like engineers or some from overseas who got a job and they want to, but they're trying to save their money. They're not trying to live lavishly. And so I think people have the wrong impression. They think they're coming with like suitcases full of cash, but that's not really that's maybe a small minority, right? That's not the majority of what we see. That's why a lot of times, when people say that, it's foreign buyers, foreign buyers is not really a thing in our market. That's why when the foreign buyer tax came along, it was just psychological. It wasn't a real impact on our market. That was like, what, 1% are foreign buyers? And even then, I've worked with foreign buyers. A lot of them don't have that much money.
Nasma, this is wonderful. You said it right. You're going to just no bullshit. You're going to call it how it is. I'm just going to launch here our poll so everybody can tell us what a great job you did and give us some ideas.
Wait, are we done?
No, we're not done. I'm just launching that. Cool.
Can I vote on this?
Pardon me? Yeah, you can vote on it too. Sure. I'm going to ask somebody asked a question. Kiki's got a question for us here. So if you look at this, this rental rates and what's going on, how do you see this affecting the apartment buildings? And those structures and the REITs is what I'm thinking about, but REITs, we can just describe that as apartment buildings.
Again, it's one of those things where I don't know how far this will continue. If it continues at this pace, at this rate where people don't have the money to spend on a higher rents, they don't want to move. There's not much kind of like moving going around. A lot of people just want to save their money right now. If this continues and if landlords continue to demand high prices, right? Because what's happening is as they're demanding those high prices, they're sitting on the market. And now there's more inventory of rentals coming. And so it's just kind of collecting and it's growing and it's not helping anybody. Do you get what I'm saying? Like versus you have a more realistic idea of rent, then you list it kind of lower and you'll rent faster. You're not going to be kind of collecting dust and accumulating. And like when a tenant comes and sees there's like 20, they feel they have power and now they can negotiate, they can take their time. So it's affecting everybody when you're listing too high. But at the same time, sorry, I know I always go off on a tangent. At the same time, I do understand why, sometimes they need to list higher. These variable rates are killing everybody, right? Variable rates, condo fees are higher, property taxes are higher. So like, I understand why investors need to squeeze every last drop, right? We work with a lot of, investors, landlords, but it's not really like, you have to still be realistic, right? Because you're not helping yourself by just sitting on the market. But yeah, go on.
No. So then Nasma, if you were going to give advice here, and maybe let's first look in the crystal ball. Would you right here, what do you think? Are you thinking that things are going to stabilize, or because you said it depends on what happens? You thinking things are going to stabilize, or do you think that there's a real risk that they go lower?
I think if things continue as they are,
Yeah.
there's no big uptick in summer, I think that it will have an effect on rent prices. I think they will come down a little bit. I think they've already come down from last summer. But I do, listen, how do I know they've come down from last summer? Because whenever I'm doing an analysis for a client to figure out what we should list at, I always look and I always see that last summer they got peak prices. But then when I look 3 to 4 months ago, it's already gone down by like $50, $100, $200, right? And they sit longer. So if things continue, I definitely see that the prices will come down. But again, like they're going to come down to a more reasonable level, maybe because, again, during COVID, 2020, 21, 22, everything shot up in price. Even 2019, they were just kind of going up because it was 2019. I don't know if you remember, we had a shortage. Our vacancy rate in Toronto was 0.7%, right? There was no COVID. There was nothing at that time. It was just a shortage of listings. And I remember we would have like 3 offers in one day for rentals. But, let's say it's summer. But anyway, point is that, even if it does come down a little bit, even if it comes down to pre-COVID, it's still a good rate. But the problem is we're being squeezed, like investors, we're being squeezed from rates on this side. And so it's hard to give a tenant a break when you're being squeezed, right? When you can't even, it's not that you can't afford it, but I mean, you're bleeding money.
Everybody's being squeezed. And
but I will say what could happen is that we probably will start to see more listings eventually. Because a lot of investors, they're just kind of thinking like, I'll tough it out. You can only tough it out so long. Eventually, this is what could happen. When that tenant moves out, it's going to be very tempting for that investor to just sell and get rid of this, right? They don't want to bleed money anymore. Because even if they get another tenant, what are they looking at? Still cash flow negative, still $500,000 out of pocket. So maybe selling is more tempting than holding on to it. So yeah, there might be more listings. I just think, this is what I think. I think that we're not necessarily at the end of the repercussions. I think that there's still some way to go for us to see the full picture of like, the consequences of everything that's been happening, the interest rates, right? The pre-construction coming out, like all of these things. I think it's too soon to assume that, okay, we've seen the worst of it. I don't know that we've seen the worst of it.
Interesting.
Oh, one more thing. I'll say one more thing, because I know there's a lot of families and a lot of our clients, they've purchased and this year they're coming up for renewal.
Yep.
Looking at 5-6% interest, that's a blow to a lot of working class people.
Yeah.
And so, and I've had clients come to me and say, I'm very worried that I'm not gonna be able to afford my house once my renewal comes, right? A lot of people say that, and that's that's their home. They're not investors, so yeah. So I do think there's going to be some listings coming up, like a little bit more. And if you're a buyer, I mean, just be patient. Usually summer, spring is better for buyers versus January, February, when historically inventory is very low, right?
So would it be safe to say if you're thinking of selling, sooner the better? If you're thinking of buying, hold on, wait, because you haven't seen all the repercussions. Last 3 things I'm going to ask you. We ask all our clients your favorite podcast.
Mel Robbins. I like her podcast.
Nice. Your favorite book?
I don't really have a favorite, but I'm reading this one right now. I'm so late.
That's a classic. Listen, that's a classic book. And then I'm going to ask you your favorite breakfast restaurant and your favorite breakfast meal.
Lady Marmalade, Saving Grace, Aunties and Uncles. They're all like kind of downtown in Leslieville. But yeah.
Love it. Nasma, thank you for your time today and your insights. Very interesting. And we're going to keep watch here and stay in touch.
Thank you so much, Anthony, for having me. Thank you. Have a great day.
Thanks, everyone.
Take care.